Ladies and gentlemen, good day and welcome to the Mallcom India Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you, and over to you.
Good morning, everyone, and a warm welcome to you all. My name is Purvangi Jain, AVP of Valorem Advisors. We represent the investor relations of Mallcom India Limited. I hope you all are doing very well. And on behalf of the company, I would like to thank you all for participating in the company's earnings conference call for fourth quarter and the financial year 2023. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and the financial quarter under review. Now, I would like to introduce you to the management participating in today's earnings conference call and give it over to them for their opening remarks. We have with us Mr. Rohit Mal, General Manager, and Mr. Shyam Sundar Agarwal, Chief Financial Officer. Without any further delay, I request Mr. Rohit Mal to give his opening remarks. Thank you, and over to you, sir.
Thank you, Purvangi. Good morning, everybody. It is a pleasure to welcome you to our earnings conference call for the fourth quarter and financial year 2023. Firstly, I hope that everyone is keeping safe and well. In the interest of some of the people who are new to the company, let me first start by giving a brief overview of the company. Mallcom India Limited is a 4-decade-old company and India's largest manufacturer and distributor of personal protective equipment. It provides a one-stop solution for manufacturing one of the widest ranges of PPE, head-to-toe PPE. The company is also one of the largest exporters of PPE products from India, exporting to over 50 countries across 6 continents. We have an expansive manufacturing footprint with 13 production facilities spread across India. Over the years, we have focused on backward integration wherever possible, resulting in significant cost savings and gradual margin expansion. Our integrated manufacturing facilities are used to module, assemble, customize, and package different head, body, hand, and feet protection products. Each of our facilities have in-house labs that perform product safety testing and ensure compliance with international quality standards right through the production cycle. Now I will request Mr. Shyam Agarwal, our CFO, to brief you on the financial performance of the company, after which I will brief you on the operational highlights.
Thank you, Rohit, and good morning, everyone. In the fourth quarter of the financial year 2023, the company achieved its highest ever consolidated revenue from operations, amounting to rupees 113 crores, representing a 13% increase compared to the previous quarter and a 6% increase compared to the same quarter of the previous year. The EBITDA for the quarter reached rupees 17 crores, representing a 15% increase compared to the previous year quarter and a 20% increase compared to the same quarter of the previous year. The EBITDA margin stood at approximately 14.82%, marking a 39 basis point increase over the previous quarter and 171 basis point increase on a year-on-year basis. The net profit after tax for the quarter was reported at rupees 10 crore, representing a 9% decline compared to the previous quarter and a 5.4% increase compared to the same quarter of the previous year, and the PAT margins stood at around 8.69%. For the annual financial year ending in FY23, the company reported a revenue from operations of rupees 411 crores, representing a 15% year-on-year growth, which marked the highest ever revenue in the company's history. The EBITDA for the year stood at rupees 59 crores, representing an 18% increase compared to the previous year. The EBITDA margin was reported at 14.25%. The net profit after tax for the year was recorded at rupees 37 crores, representing a growth of 70% on year-on-year basis. The PAT margin stood at 8.99%. Now I request Mr. Rohit Mant to give the operational highlights.
Thank you, Shyamji. As mentioned, the company achieved its highest ever quarterly and annual consolidated turnover in Q4 and FY23 respectively. During the second quarter of the fiscal year 2023, the Ghatakpukur project became operational, contributing to its growth. Furthermore, the company has signed a MOU with the Gujarat government to invest almost 108 crores in a 50,000 square meter land at Sanand 2 GIDC for the Protect range. In recognition of these achievements, the company was awarded an upgraded certificate of 3-star export house by the DGFT, Ministry of Commerce. Additionally, the Registrar of Companies, Ministry of Corporate Affairs, and the company was also honored with the SME Empowering Award by Sri Bhanu Pratap Singh, the Ministry of State for Micro Medium Enterprises, Government of India. Moreover, positive developments were observed in international trade relations. The Government of India signed FTAs with UAE and Australia. Furthermore, discussions with UK and European Union progressed, indicating a positive outlook for potential agreements in the future. Furthermore, we got granted approval for merging a 100% subsidiary BSPL with retrospective effect from fiscal year 2022. The company also made an additional investment of 12.5 crores to acquire the remaining share of its joint venture partner in MSPL, making it a wholly owned subsidiary. As a result, MSPL has improved, leading to better turnover and profitability. To fuel future growth, the company increased investments in research and development, brand promotion, business development, product certification, and e-commerce. These strategic initiatives aim to drive innovation, expand market presence, and enhance customer satisfaction. Thank you. With this, we can now open the floor to questions and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw your question from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes.
Yes.
Sure. Thank you so much. So, sir, going ahead, given the Ghatakpukur expansion being done, part of the phase was with regards to shifting of the facility from West Bengal. And then in the previous call, you had also mentioned that gradually we'll add capacity also over there. And with regards to the Ahmedabad capex, the existing facility. So how do we see the growth ahead for, say, FY24 and FY25, given the amount of capex which is already done and given the capex which we are going to do in next 6 to 12 months? Hello?
Yeah. I can take this up. So the Ghatakpukur project, we are still shifting capacities from our other unit to the Ghatakpukur project. So the capacity is still building. It's yet to be additional. It's right now just movement. And with Gujarat, we've done the expansion, and now we are waiting for improved utilization of the capacity and efficiencies. So growth should be in a similar fashion because it's not just us building the capacity that will lead to good growth. It is also dependent on the market, how the market is moving and a lot of macroeconomic, issues also. So I think we are aiming for a similar kind of growth as in line with this year.
So that would mean about 15 to 17%?
Yeah. So yes, so that is the stated target. So it should be in the range of 15%, which we achieved this year also. And talking of these two capacities, So as Rohit mentioned that the capacities are to be built up there. Infra is ready and utilization also need to be improved. So it takes care of our future, plans for the current year and the additional turnover in the years to come. So that capacity we can always build up. So at the moment we are shifting the capacity and then we start adding to that also in Ghatapukur capacities.
And sir, with better top line, can we see some kind of operating leverage and thereby some margin improvement and also a bit of product mix changes? Last call you had mentioned about specialized garmenting proportion increasing. So this year, can we expect some uptick in the margins by say about 100 to 150 bits? Is that a possibility?
I think it would be, since the project is new, yes, there has to be some, not immediately, but in going forward in future, there has to be some cost optimization. So the benefits should be coming, but we should not expect coming some significant benefit during current year, because we have just set up the facility and there would be, we need to wait for the operations to stabilize there.
So last question, in our previous two interactions, including the Concall, we had mentioned about the treaty being signed with UAE and Australia and the team at Mallcom traveling overseas in terms of new business opportunities. So any update on that side, both in terms of Australia, UAE, what kind of additional business we can garner or we have been able to garner, and any good customer addition, because you had also mentioned probably we can add some one or two good customers. It can be a kind of a sizable order for us.
Right. The trips were decent, and we regularly keep going on visits. And definitely the Australian market has been, both the markets, the Australian as well as the UAE market, have been very responsive because, there's duty-free trade now. And we have started conversation with some of big importers from these places. For the UAE markets, since it's our branded sales, we have added a couple of more distributors there. We used to have one. I think now we have 3 or 4 of them in the Middle East. So that's a sign that it's progressing, and I think the turnover already has increased from that region. Similarly, for the Australian market, the turnover has increased, but we are in talks with some big importers, because in this private label business, it takes time. The gestation period is longer. So the trip has been only, completed for like 2-3 months now. So I think maybe by Q2 or Q3 of 24, we'll start seeing the impact from it. But definitely both markets look pretty positive.
Thank you, sir, and wish you all the best.
Thank you.
Thank you. We have a next question from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, good morning, sir. So my first question is, if you can give us some sense in terms of growth both for export and domestic market that is built into this 15% growth. And how do you see growth panning out in domestic and export market actually?
So Rohit, I think the top line, I would just refer there. So we had concentrated growth of 15% for the year, and definitely the local market, branded market is doing better. So we had almost 20% growth there, and for export market we had 12% growth. So this is what we could do this year. And Rohit, now you can take up for the next part.
For the future also, I think that's what is predicted also. We expect more growth from the domestic market, plus 15, 20%, something like that. The export market, we are, treading with caution before giving any estimates, because as you know, the situation in Europe is not so great, and the stock levels are high. The order position is a little mellow to our liking. So we'll have to see. It's not that we are not expecting growth. We are definitely will be pushing for some growth, but not as high as the domestic market for sure.
Okay. So, Rohit, I understand that situation on the macro side is very fluid in the Europe part. But let's say 2-3 years perspective, given that we are well established, we are entering new countries, and considering that, we have marquee clients, and then, we've been talking about China plus one, playing out. So don't you think that our export market growth ambition has to be, much higher, or how do you guys look at that market growth?
No, ambition is definitely higher. There's no questions about that. But can that be converted into actual sales is what we need to see, because no matter what we say about having marquee clients and China plus one, if there's no demand, then there's no point of having any client, because even the clients can't do anything if there's no demand from the market. So the growth is definitely will come. It's just that we need to see the timing, and maybe it will not come as quickly as previously thought. It will be delayed, or the rate of growth will be slower than expected. But definitely we are expecting, and we are very bullish about the export market, about Europe, South America, Australia, North America as well. So we are definitely bullish about it, and we are expecting growth from it, but can't comment on how much and what would be the rate of growth. Indian market, we have more visibility, so we know. International market, the visibility is a little lesser, because we are a little away from the market in terms of the supply chain.
So Rohit, just to add on to AJ strategy, now what we are doing, apart from all these things, what FTA and the China plus one policy, what we are targeting, we are going to the new markets also, and with the new products also. That is also one of the strategy we should add on to our future efforts and performance. So.
So last question from me. So in terms of domestic market, both in terms of geographical reach and in terms of product basket, have we completely exploited the full potential, or is there a room or white spaces, both in terms of our geographical spread and in terms of product basket? If you can talk about that.
Oh, in the domestic market, no. It's still, so the market number one itself is in a very nascent stage. People themselves are getting used to the concept of PPE and safety. It's getting, more people are getting aware. The users are getting aware. So it's a very new market. And in terms of our presence in the market, I wouldn't say that we are, everywhere. We have almost 60 odd dealers or maybe more in the Indian market. But I wouldn't say that we have covered all the cities, all the villages properly. I think there's still left to be covered, and we are talking about adding salespeople, adding dealers every day. And in terms of product also, no. The entire PPE category is a big category, and we are not there in all the product segments. We are definitely wanting to add newer segments. So every year, I think we are adding 1 or 2 new categories in our product basket. So no, I wouldn't say that we have exploited everything.
Just a follow-up on that, can you call out the white spaces in the product basket? I mean, in terms of head protection, I mean, where we are reasonably well present, and where we need a lot of things to do or introduce more products. If you can give segment.
In the new product category, you mean?
No, in the domestic market, let's say, the shoes and then the head protection. Are we present across all segments, or we think that there are only a couple of segments where we are present and other segments we will introduce as time passes by? How do you see that?
So we are well established in shoe category, in synthetic glove category, even in leather glove. Newer things that we are adding, for example, is a high-vis, jacket category for the domestic market. We are definitely doing it for the international market. Now we are exploring it for the domestic market because as you know, we only do certified product and good quality product, but there's a lot of cheap and uncertified alternates available in the country. So that's why it never interested us. And now when, this demand of quality and certified products is increasing, so we are adding this to our product portfolio. So high visibility jackets are one. Helmets, like we said, we started only a couple of years ago, and now we are adding molds, new styles, new designs, every year. Last year we, introduced a new model. This year also, hopefully, end of the year, we'll introduce some models there also. So these are some of the categories. More investment we are doing in synthetic gloves also with different kinds of synthetic gloves. So these are the categories we'd like to push in the domestic market going forward.
Great. I have more questions, but I'll come back.
Thank you, sir. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, kindly restrict your questions to 2 at a time. You may join back the queue for follow-up questions. We have our next question from the line of Dhruv Rathod from Solidarity Investment Managers. Please go ahead.
Hello, good morning. So, sir, actually, I had a few questions. So, basis our conversations with our customers, so do you see a strong effort de-risking from China from a cost perspective? Like, can we compete with China on pricing? And if they want to de-risk with China, why will India get the market share and not countries like Vietnam or maybe Bangladesh who have a very strong foothold in textile manufacturing?
Right. Good question. So companies are definitely discussing de-risking from China, or let's say creating an additional supply chain outside China. Some companies are very strongly discussing it with a clear mandate. Some companies are lukewarm. They're testing the water. They're seeing. So it's happening. They're talking about it and they're taking actions about it. Can we compete with China in terms of prices? Not in all cases. And, this is very clear because the kind of raw material availability, supply chain, efficiencies they have, we don't have it yet. So not in every case can we compete against China with prices. Some products, yes, we can, especially when all the raw materials and supply chain is locally. If anything has to be imported, then, makes us less competitive. However, some companies understand this and they know that, moving out of China is a cost that they have to bear. So, if they're ready with it, then only they talk to us about it. So that's the second part. And then you asked, why India and why not other countries? So it depends. Other countries have, sometimes depends on the country. Sometimes they have higher labor costs. Sometimes availability of labor is a problem. Sometimes ease of doing business is a problem, or or the social structure is such that they don't want to do the business there. For example, Bangladesh, not a lot of people, even though they know that it's the textile hub, not everybody will go to Bangladesh to get their products manufactured. So there are different reasons why, plus the availability of land in itself is a big thing. A lot of people also understand that Vietnam, Cambodia, like, China's backyard. So, even if you're exiting China and going to Vietnam or Cambodia, you're still probably working with the Chinese. So they want to avoid that. So that's why, there've been, or also, in a lot of cases, they see India's political stability as a, big plus, that, they like the leadership and they see visibility and future here. So these are some of the reasons why they prefer India over other countries.
Got it. So also, what is the status exactly about norms and laws towards the labor safety, specifically when we speak about India, right? So what is the norms there?
I'm sorry to say, not a lot of norms here. There is a talk going on to have it's I think already tabled in the parliament to have a labor code which will include all different laws together and with a lot of emphasis on HSE, health and safety. Right now, whatever there is, either it's very faint or it's not implemented properly. But now, I think there's more power being given to the certifying bodies like BIS to establish the laws and execute it. I think they're starting with the mass usage products first and then getting into specialty products. So it's a long way that we have to tread before we can say, okay, these are the defined laws, this is what everybody has to follow. A lot of the cases right now is, big MNCs having their own laws and requirements which are followed.
Thank you. We request you to join back the queue for follow-up questions. We have a next question from the line of Aditya Pal from Motilal Oswal Financial Services. Please go ahead.
Hi, Rohit. So just wanted to understand, is there any particular reason that we are not planning to get into fall protection equipment?
So our reasoning is that we want to ensure that we are well present and well penetrated in the categories that we are already there. So we would like to go more in depth than in width of the product lines that we are in. If you see, our revenues are already well spread between hand, body and feet. The next one is head that we want to touch and get established into, and then maybe we can think of fall. So we don't want to spread ourselves too thin by getting into more product categories. We like to stick to these four as of now. Still a lot of products in these four itself. Once we have established ourselves in these four categories properly, then maybe we can think of the new one.
Okay. And also, in last call, we had highlighted that our 1,000 crore milestone that we wanted to achieve has been pushed to FY28. Is that correct?
Yeah, wasn't that always the idea? I'm not sure of
because in FY22, sir highlighted that they want to achieve by FY27. So what I wanted to understand from you is that with the current set of products, with the current set of product basket that we have, is that milestone achievable, or we have to enter another category as well to achieve those run rate?
No, with respect to category, there's no problem. With the current set of category, yes, it is possible. There are companies in the world which are just in one category and they're more than 1,000 crores, in manufacturing of, PPE. So product category is not a problem.
I meant product basket. I didn't meant the category, because definitely category.
Yeah, even with the product basket, there are companies who are just doing synthetic gloves and, much bigger than us. So product basket is not a problem to be achieving that growth and the target. We have to, ensure, we have the required customers, required, run rate, and, hopefully macroeconomic everything stays positive. We'll be able to achieve that.
All right. And we have been able to grow our gross margins quite consistently. So do we see a bit more headroom in terms of expansion from here, or this is where we've touched the ceiling?
No, I think it would be like similar for the time being. So let what we have done, we have invested heavily into infrastructure now, and let the new capacity fully utilized maybe within the next 1 or 2 years. Then we can see some benefit out of this. But immediately it is it should be in the range of whatever range we are doing, like 14-15% should be the with a margin for the time being.
Thank you. We have our next question from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thanks for the opportunity.
Sir, can you use your handset, please? Your voice is not clear.
Is it better now?
No.
Is it better?
Sir, are you able to hear him clearly?
Yeah.
Okay, please go ahead.
Sure. If you can please talk about, like we wanted to increase the proportion of hiring the apparel and specialized apparel, which have high realizations. We have been trying to penetrate that market.
It is not clear. Why?
Yeah, it's a very hazy voice.
It is breaking basically. Yeah.
Is it better now?
No.
No.
It is still the same.
No, I'll come back in the season. No issues.
Okay, thank you. We have our next question from the line of Kranti Batini from Wealth Mills Securities. Please go ahead.
Hi. Just want to know, since you are more into the protection services, could you able to give any kind of sense of what is your market share in India? And also, I want to know how the raw material prices, the margin pressure going ahead.
So sadly, in India, nobody has done any market study of the entire PPE industry. So it's very difficult to ascertain the market size and therefore the market share. But from our faint estimates, I think it's anywhere between 12 to 15,000 crores, of which we are expecting that almost 50% is unorganized. So yeah, that's what our understanding of the market is, and then you can know the market.
It is more dominated by the Chinese products in India?
Not more. Yes, a lot of Chinese and imports are there, Chinese, Malaysian, Taiwanese, etc. But I won't say it's dominated by them. But yeah, big share, especially in some categories like gloves. Yeah, it's definitely there.
Thank you. We have our next question from the line of Rahul Dhruv from Pegasus Growth LLP. Please go ahead.
Yeah, hi. Okay, so I wanted to know, sir, is that, in the past, your asset turnover ratio has been around 3.7 or 3.6. We've seen a big jump in the gross block last year to around 145 crores. And also you have some plans in terms of huge capex for the next 2 years. So can you explain to me where would the gross block be in 2 years, and what kind of asset turnover ratio can we expect by 2027? Is when we are saying we will be at 1,000 crores, right?
So, Rohit, let me explain. So, you see, we are 40-year-old company, and we have been growing slowly. And whatever cash we are generating, we have been investing over the years to build up our capacity to take care of additional turnover requirement or growth requirement. So, what has happened is you will see that, including this year FY23, we have already invested almost 100 CR, during last 3-4 years. So investment which needed to propel our growth and the target which we have fixed up that we should be 1,000 crore turnover we should be having by FY28. So for that we needed to invest, and also considering the market situation like the Indian market which is developing now very fast, and the overseas market also we say that we need to go at different place with different products. And with the China, business shifting that, so to take care of everything, we have been investing. We have already invested, and this year we plan to invest further, maybe 20-25 CR we are investing, and from next year onwards, it would be in the similar range. So much of the capex has already happened, and the asset turnover ratio which you have mentioned, it was on the higher side because we had not that the infra which we needed to create. That has happened only recently, and going forward also the turnover ratio should increase with the 1,000 crore turnover target. And so what we have done, that we have the land, building, everything ready, and we just need to put up the machinery there and to take care of my additional productivity requirement. So that is the plan.
Yeah. So what my question was, sir, is that you are at 145 crores of gross block, and you're planning another 25 crores next year. So you're effectively talking about 170 crores. That 170 crores is capable of generating what kind of revenue is what I'm trying to get.
Yeah. So let me just clarify. It is 115 CR is the gross block on consolidated basis, and not 145. And yes, we should have maybe after FY24 we will have around 140 CR of gross the block, fixed asset block. And based on that, we should be doing around up to maybe 600, 700 CR is easily achievable. So that gives you turnover ratio for asset turnover ratio up to 4.
Thank you. We move on to our next question from the line of Zaki Nasir from Nasir Investments. Please go ahead.
Sir, good afternoon and good morning. I think it's congratulations on a fantastic set of numbers for 23. Mr. You were indicating that the visibility in the international market is slightly low. Nonetheless, the last quarter, I think you achieved a pretty decent growth from revenues outside India also. So, but do you think that current year you will at least be able to maintain a growth which happened 2022 over 2023, sir? And my next question is your thoughts on selling branded Mallcom versus non-branded, which you do for third party. I mean, what would your thoughts be on Mallcom share of branded versus non-branded going forward? Thank you.
Right. Yeah, in terms of export growth in line with the last year, that's what we are aiming for. And we would like to, have that much growth or maybe more. The only thing why I say less, visibility because of the macro situation of what will happen, how their banks would change their interest rates, how the economical situation and political situation moves. For example, last week Turkey had elections, and because of the elections, the lira completely depreciated, and imports got expensive for them all of a sudden, more than what they were used to. So things like these start affecting the sales. So that's why the visibility is less, but we have a strong customer base, so we will expect to have the same kind of growth rate. We'll try for that. And in terms of branded versus private label going ahead, I think we would ideally want to be right now we are almost in a 60-40 ratio, 60-38 or something like that. We'd like to move it to 50-50. That's the ratio we're aiming at.
Fantastic, sir. And best wishes for the next 2-3 years, sir. Thanks a lot.
Thank you.
Thank you. We have our next question from the line of Aman Tadani from Solidarity Investment Managers. Please go ahead.
Hello. Sir, thank you for taking my question. Sir, my first question is, we understand that this is a very fragmented industry. So what is the competitive advantage that Mallcom enjoys against other players which will help us win in the long term?
Right. So it depends on the market you're talking about. So a couple of things. One is we are a one-stop solution, so we do head-to-toe all kinds of PPE, which most of the manufacturers don't offer. So that's one point which helps us keep our edge. We have invested a lot, and we keep investing a lot in R&D, in certification, in product innovation. So that, I think, is a strong point that we are able to quickly revert with newer products as per the market demands. And then in the Indian market, I would say also brand recall. So there's a pretty strong brand recall, and we've been investing in our branding activities since a long time. So that is there. We have control over our supply chain. Some of the parts we've backward integrated, for example, spinning our own yarn. having a leather tannery. So these kind of things we keep on doing, to invest in our capabilities to ensure we're controlling as much as possible with the supply chain. Even for outside vendors, some of them work exclusively for us, and we help in developing products with them. So these are some of the things that we do to ensure we have a competitive edge.
And Rohit, to add on, we are now a 40-year-old company, and we know we have the experience, and we also have the infra. So over the years we have built up 13 units we are running now, and we have DTA units, we have EOU, we have SEZ as per the customer requirement also. So we have this advantage of catering to the as per the customer needs. So if somebody wants to buy from SEZ and you would like to supply goods from overseas, that also we can provide. So certification and experience and infra, these are some of the few advantage we will have.
So just a follow-up question on this. So how difficult is it for someone to get appropriate certifications for the products?
Again, depends on what product and what kind of certification. Some certifications are highly difficult to get. Some run-of-the-mill basic commodity products and their certification is relatively easier. So depends. We are trying to move towards the more high-end, products where certifications are difficult, achieving certain levels are difficult, and that's what we are doing. But some of the products is not so difficult. You just need to have the right materials to get the certificates.
Thank you. We have our next question from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, sir. So my question is on the MOU that we signed for Gujarat plant. So can you give us some sense as to, will we be doing this investment in phase-wise manner, and what is the timeline that we are thinking about? And are we thinking about creating this plant for catering to any specific market or any specific product segment? If you can talk a bit about that.
Rohit, should I?
About the investment you can mention,
About the capex, so what we have done, we have already invested 23 CR for land, and this year we plan to invest further 20-25 CR. So with this, the first phase will be complete, and so almost 50% of the capex which we have planned, and we come up with one factory shed, and to begin with the smaller capacity of synthetic gloves, which we primarily will be manufacturing there. And apart from that, we also have plans for manufacturing of helmets and other IVR and other products. So that would be also smaller capacity would be built up there. So we have for full phase 100 crore capex, which we will be doing. Out of that, 50 we do within this year, and maybe within next 2 years we will have another 25 CR each over next 2 years. And immediately we should be having around 20-25 CR turnover from the current capacity. But once the full capacities are built up, turnover should be in excess of 100 CR, which is the projected one for this plant.
So what you're saying is that once the full 100 crore is invested, the projected turnover is 100 CR. Is that the right understanding?
Yeah, immediately, that is yes.
Thank you. We have our next question from the line of Dhruv Rathod from Solidarity Investment Managers. Please go ahead. Mr. Rathod, please go ahead with your question. Since there is no response, we'll move on to the next question from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Are you able to hear me now?
Can you ask your question?
Sure. Rohit, if you can talk about some we have been trying to contact the
No, I'm sorry. It is not clear.
Yeah.
Okay. Rohit, if you can talk about the high-end apparel, fire gathering materials, that we are planning to do and that we are planning to scale up. How is that the acceptability of those products in our customer base, and how do you see the growth for these products over the next 2 to 3 years?
Right. So you're asking about the high-end workwear.
Yeah.
Right?
Yeah.
Growth and visibility. Right.
Yeah.
So yeah, these are mostly developed in partnership with some customers. So they usually come up with what kind of different high-end customized workwear they would like, and we do it with them. So there's definitely every time we're doing it, we are enhancing our experience and our capability of doing these products. And that's why in the international market, we are known for our workwear capabilities. There has been interest, from existing customers and to get new customers also in this. And we are opening new markets for this as well. So there's definitely good prospect of this category. And we would like to, invest more into getting, having more of such SKUs.
Sure. And the second question, Rohit, was on, in the last meeting with producer, he had indicated that, with the company now generating significant cash flow and we have different size also. Earlier, we were not looking at when anything used to approach us for large contracts. There were some constraints because of the capex required for that. So, we in terms of cash flows and capex, we seem to have crossed that barrier. So, but are you getting those kind of opportunities in the export markets where, MNCs tell you that, you invest some 50 crores in a plant and will be taking the entire capacity from that line of the plant?
Yeah, so definitely there are, talks which happen in this regard. But we are very cautious of who we are partnering with and who we are giving our capacities to. Especially for high-end, more value-added products, because those capacities are not fungible. So once committed, it stays committed for a long time. For commodity products, yeah, we are okay with in talking to anybody, but they're usually there because there are so many suppliers, so nobody talks about just booking a capacity. Most of the people don't talk in that regard. But yeah, for the other products, definitely there are talks of booking capacities and having long-term contracts. And we already have some who have booked capacities or booked raw materials with us. Nobody and there's underlying amount guaranteed for that. But yeah, no concrete plans yet of having a equity partnership or anything like that.
Thank you. We have our next question from the line of Rahul Dhruv from Pegasus Growth LLP. Please go ahead.
Yeah, hi. I had a first question on your consumer business. I mean, I recently remember talking about rainwear and snowwear for consumers rather than industrial need. This was a conversation I had, I think, at one of the conferences. So just wanted to know what is the plan on that, and do we expect a good branded business to come out from there?
We are working we're working towards it. But we are not seeing this as a standalone business or as something that we need to work completely on a different module and just a team focused on this. We are seeing it more as an allied avenue, where if we are building products which can work in the consumer space also, we'd like to distribute it there, because the distribution channel changes completely. The pricing and everything changes, the modality changes. But it's an interesting market, and we are working on it. And every time I think we are doing some product development. There are some products that we think goes well with the consumer market. But our priority remains the B2B business, and this is more of an allied. But definitely you will see more products coming out in this area, and hopefully decent revenues coming from this business also.
And what will be the distribution network that you'll be looking at for this?
Also depends. Online is one which works for this kind of business, and then different kinds of distributors, not distributors, dealers that we are used to. These will be different distributors depending on what is the product. If it's a rainwear, it will be a different set of distributors selling it, or wholesalers selling it. If it's lightweight, or your people what doctors wear, or nurses wear, things like that, it's a different kind of distribution network and different kind of supply chain which is established. So it depends on the kind of product. I don't think there's just one pill for all. So yeah, that's what we are exploring at the moment. Which product to go in for, what kind of distribution setup do we need? Do we really want to invest in a new distribution setup or a different distribution setup? Because then it will lead to increasing costs. So we're exploring all those based on our product categories.
Thank you. We have our next question from the line of Deepa Agarwal from Niveshaay. Please go ahead.
Yeah, am I audible?
Yes.
Yeah, I wanted to know, is there any way we can track the competition from, unorganized sector, since you said 50% of the market is from unorganized? So there is this, one private company, Karam Industries, which is making, good business, having top line similar to us. They had margins the same. The margins are higher than maybe what we are having it right now. So is there any reason, why the private, the unorganized sector is still having 50% of the market and nobody is able to track it?
Yes. So the reasons are, because there is lack of certification, there's lack of implementation of standards. That's why there's so many unorganized players. Once the authorities get stricter with the implementation of the law, with the creation of the standards, and having more penalties, that's why that's when we address the real problem of removing the unorganized players. Right now, if there are 80% of the companies in India are MSMEs, right? And most of them, if they need to buy a workwear or a simple garment or something for their workers, they can go to any nearby tailor and get it stitched, and they can buy the fabric off the market. They don't need to pay anybody to get this. However, if the standards are defined, not every tailor will be able to do that. So that's step one of eliminating the unorganized player. Step two is definitely the reach. India is a big market, so we have to be able to reach to every village, every tier 3, tier 4 city that there is, where industrialization has happened, and we need to be there with our products. And thirdly, I would say it's a very price sensitive market. So more you get organized, the more increase is there in the price. And to a lot of companies, still this is just an expense item, and they want to reduce the the impact of FCL for these items. So it's a question of mindset also, which needs to be changed.
And Rohit,
Oh.
also I think Deepa, you mentioned about the tracking the competition. I think this is what she referred. So yes, we do have. So whatever you like, there are competitors in different product category, and we know what they are doing, and yeah. So that is yeah.
Okay. One more question I wanted to know, like, so there is this new CapEx announced in Gujarat. Is it any other CapEx after this in pipeline to reach the 1,000 CR target, or we are done, like we are in line with what we are planning?
No. So let me clarify. So what we have done there, see, in our type of industry, there are two parts basically. Once you need to have, your infra ready, you need land, you need big building constructed. So that is the phase one where you once create the major facility. And then talking of like garmenting. Now for that you need, stitching machines or different type of finishing machines, cutting machines or infra related to that. So you can always, once you have the space ready, you can always add on to the capacity. So what we do, so in recent years and current year, we plan to invest into infra. And going forward, whenever, within very short time, you can have, these machines imported and installed, or, so capacities can be built up as per requirement in very short time. So largely the investment would be done, and whatever is required, for production facility, that we can keep adding on, but the value would not be much there.
Thank you. We have our last question from the line of Dhruv Rathore from Solidarity Investment Managers. Please go ahead.
Hello, am I audible now?
Yes.
Yes.
So, sir, just one question. From FY10 to 15, Mallcom had seen a compounded revenue growth of 20% or more than that. But from FY16 to 23, the compounded revenue growth was 6%, driven by actually muted export sales. So, actually, what were the challenges that Mallcom faced in this particular period?
So I would say that it was, first thing, it was the smaller base also. And second, what we did after some time in 2015 onwards, we are concentrating more on, increasing top line as well as increasing the profitability. So we have moved out of the low value, low return product like leather gloves, which used to be our main product category at the beginning, or maybe garmenting also, but low value garments, not exactly what we are doing now. So that has been, the effort was that, so now we should be something different from others. So let us concentrate more on investing into technology and, infra. So that is now contributing into turnover also. Turnover is also increasing, and more than that, the profitability has increased.
Thank you. I now hand the conference over to management from Mallcom India Limited for closing comments. Over to you, sir.
Thank you all the participants in this earnings con call. I hope we were able to answer your questions satisfactorily and at the same time offer insights into our business. If you have any further questions or would like to know more about the company, please reach out to our investor relations manager at Valorum Advisors. Thank you. Stay safe and stay healthy.
Thank you. On behalf of Mallcom India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.